G'day all, welcome to another episode of Shooting the Breeze with Switch Finance, and we are fortunate enough to be doing it in our own office today, which is good. We've got a special guest today. We've got Rowan Siepen, my accountant from Apex Accounting and Advice. He's been looking after me for quite some time, and I highly recommend him, especially for anyone in small business that need to focus more on their business and less on their books. And he's a very good teacher in Xero. He's been helping my wife with that program, as she's not very technologically savvy. So thanks for joining us today, Rowan. Really appreciate it. Hopefully you can give us some good insights on what's happening in the current COVID climate.
Rowan, obviously you would have had a number of your clients come to you the last little while in terms of asking for Jobkeeper and looking for business loans in this uncertain environment. And it looks as though what the government has offered has really helped small businesses. But as we all know, this is going to come to an end, probably in September. And have your clients sort of spoken to you as to what their expectations are, how they're going to manage once we get to the end of this process?
Yeah, so we're speaking with my clients. There's a lot of uncertainty. Most of them are pretty scared, very concerned about the economy, and they don't know what's going to happen. And they don't really have plans other than to continue trying to run their business the best they can, but lots of uncertainty.
Have you heard from the government on whether they're going to extend that, or is that unknown at this stage?
It's unknown at this stage, but there is a bit of talk about it.
Yeah.
But yeah.
All right. And would that be for certain industries, or would it just be across the board?
It would be for the JobKeeper payment. It would be for whoever's eligible for it, and would just simply be an employee, and sort of an eligible employer. If they have an eligible employee, they have to pay them $1,500 a fortnight. Yeah. And as long as they do that.
No, why I asked is I know that some businesses are actually thriving during COVID, and it's strange to think that they give everyone the same thing. I just found that a little bit odd. That some businesses that are thriving are still getting the same as some that have had to close, like restaurants, etc. Yeah. It's across the board, isn't it?
Yeah, well, it's the main test is if the income is turned down by 30% as compared to last year.
Oh, okay.
So if the turnover in 1 month was 100,000 last year and this year it's only 70,000 or less, they're entitled to the JobKeeper payment for the employees. As long as the employee is a full-time employee, a part-time employee, or a long-term casual, and they're an Australian resident.
Okay, so casuals will still get it if they're long-term?
Long-term for 1 year, yeah.
Yeah.
Number one, the first step is you enrol with the ATO, you report your details to them, and you say you believe you'll be entitled to, you have had a 30% downturn, and then you report your income for the first month being April. When you report your income, you simply report your April income this month, and then you report your predicted next month's income. And then every month on the 1st of the month, in between the 1st and the 14th of the month, you then declare your income, and you'll be declaring what your current month is, just the month has just passed, and what your predicted future month will be.
Okay.
Up until the end of September, and your last time you'll report that for the last fortnight will be on the beginning of October, before the 14th.
Can I just ask a follow-up question, because that's different from what I understood. I understood if you qualify once, you automatically qualify for the rest of the time, but you're saying it's a bit different. That's
a very, very good question. It's very correct. Once you're in, but you still have to declare your income every month.
What if your income, because I've got an example of someone who I'm dealing with right now that had, because of an accounting issue, had a 30% drop in April, but their business is booming, so probably in May and June they're going to be up.
From what I understand, I've had that question many times. I believe once you're in, you're in. Yeah. So some people win, some people lose, but the government's trying to throw money into the community. So it's just trying to be as efficient as possible delivering it. So there's some people that have lost, some people unfortunately lose out a lot, and some people are business as usual and still get the money.
Yeah, Rowan, I heard there were some alternative tests to see if you're eligible for the JobKeeper. Is that true?
Yeah, very good question, Paul. I believe there's 7 alternative tests for the JobKeeper, which can allow certain businesses that have just started up, because it's not fair, because they don't have an April or a March or April month to compare to. And there's other businesses that had significant increase in turnover. There's certain tests for them as well, because while you're building your business, your turnover is going to go up, but your profit still might be the same as what it was before. So just simply using that turnover test for March and April will not be relevant to those ones. So yeah, they are pretty complicated, and it would be best if anyone needs some help, we can help them out.
Right, so Rowan, a few of my clients are a bit unsure on what they should purchase when purchasing an investment property. Should they buy a brand new property or should they buy a second-hand established property? What are the advantages of doing either way?
Yeah, good question, Bobby. When purchasing an investment property, the purpose would be to negative gear short term and long term, hopefully developing an asset that you can sell and make a lot of profit from. During the investment time, you would deduct expenses against your rental income. The expenses you would deduct would be interest on the loan, rates, insurance, body corporate fees, for example, and in some cases depreciation. So with depreciation, there is two types of depreciation, Division 40 and 43. Division 40 is for plant and equipment type items, which is the smaller items that only a brand new house can claim deductions for, or somebody who's renovated their own house. So that would entail instant write-off assets and some assets like your kitchen and things like that, which can be depreciated over maybe 5 to 10 years sort of thing. The second rate of depreciation is Division 43. This is depreciation on the building. It's 2.5% on the actual building. And simply both can claim it, but the newer house will claim a lot more because it's newer and it's worth more. So in this question you've just asked me, Bobby, it would be obvious that a new property would be able to claim more deductions.
The fixtures and fittings, Rowan, does that like incorporate carpet, blinds, ceiling fans, all that sort of stuff?
Yeah, all of those things. Everything really except for the building and maybe the concrete driveway and a pool, things like that.
And are they claimed over a much shorter period than the actual building or shell of the property?
Yes, yeah, they're claimed a lot more accelerated. So some of them can be claimed outright, like for the really small items, and then some of them can be claimed in between 5 and 10 years. So, 5 to 10 years worth, you get a lot of depreciation for those items. So if it's a brand new house, at the start, you're getting lots more depreciation. And then long term, you still get the building runoff, which is amazing. Building runoff is 2.5% of the building again.
How long does that go for?
Yeah, the building runoff goes for about 40 years.
40 years.
Yeah.
And who works out the depreciation? Is it an accountant or do you do it yourself?
Yeah, we get a quantity surveyor to do a evaluation and a depreciation schedule on the property and its fixtures and fittings.
And we've got Marco up in Mackay joining us virtually. Did you have any questions for Rowan, Marco?
Yes, Ray. I do have a question. I was wondering, hi, Rowan. There are some questions that my clients are asking me, and is there any tax deduction that people are allowed to claim because they have to work from home?
Good question, Marco. Well, thanks for the question, Marco. The ATO has announced that working from home, some new rules have changed. They are allowing a flat rate of 80 cents to be claimed per hour working from home. This would cover all of your home expenses, including depreciation items. So it would be your heating, your lighting, your cooling if you had that as well, and depreciation items on like a computer, a printer if necessary. So simple as that. So you wouldn't claim the depreciation on them, you just claim that straight 80 cents per hour you're working from home. And you would have to substantiate you're working from home with a diary somehow. Also, there's another rate, which is a 52 cents per hour. This allows you to claim your heating, your lighting, and other office expenses, but also you can claim separately depreciation on other items. So you claim the 80 cents if you don't want to claim depreciation separately. Otherwise, you claim the 52 cents an hour, and then you might have depreciation on your office desk, your printer, or computer and laptop and phone, things like that.
Where are we at with the instant write-off for depreciation of things? Last year we were able to claim 30,000. What's the case with it now going forward?
As most of us would be aware, that the instant asset write-off has increased from 25 to 30, and now as of the 12th of March 2020, it has been increased to $150,000. Meaning if you are eligible small business and you purchase an asset for 150 or less, you can immediately deduct that entire 150 or less, whatever it is, as per the business portion of what it is related to your business. If you purchase an asset worth more than 150, then you can still deduct a part of it and then depreciate the rest over its lifetime.
I find it very confusing as a self-employed person. You know, there's PAYG withholding claims of up to $50,000 and $10,000 amounts, and I really can't follow it. Maybe you can sort of clear up what is available for self-employed people and the framework around that.
Yeah, very good question, Ray. What you're discussing is it's called the boosting payments. There's 2 of them, and they're specifically to provide relief for employers that employ staff. In the first round, there is every employer that lodges a March BAS, being monthly or quarterly, you would get a minimum of $10,000 credited into your integrated client account, up to a maximum of $50,000 credited to the account. Then your following April to June BAS, or if you do monthly BASs, the ATO will pay you the difference of $0 to $50,000, really, or in between $10,000 and $50,000, but you've already got 10. Meaning, yeah, so an example would be if you got 10, you only paid $5,000 withholding tax in the first quarter, the ATO gave 10, the next quarter you might pay another 10, then the ATO, because they've already given you 10, they'll give you another 5 at the end because you've now paid $15,000 in total.
So what determines whether you're getting 10 or 50 grand? What drives that?
Yeah, simply if you had a employee, your own business employs a staff member, one member at least, on the 1st of March 20, and whether you withhold tax from that employee or not, you're entitled to a minimum of $10,000.
Okay.
Up to 50 again. That's the first round of stimulus package, the boosting package. The second round of the boosting package is whatever the PAYG withholding in between January to June was, for quarterly, they'll halve it, and in June, they'll pay you another half of that, and in September, another half. Meaning, if you had withheld $20,000 in PAYG between January to June, in June, they'll pay you another 10, and then September, another 10. So effectively, you're going to get about 40 grand in that example.
So it's based on how many employees you have, or how much PAYG withholding you had to pay in that quarter. Is that right?
Yeah. So it's going to like the minimum of $10,000, but they'll offset the PAYG withholding that you're meant to pay on your BAS. So if your PAYG withholding was $12,000, they'll credit the 10, and then you'll have to pay the remaining 2, okay, plus your GST. And yeah.
What about sole traders that actually don't employ anyone? Do they get anything?
Yeah, so that's now talking about the JobKeeper. A sole trader, if they don't employ anybody, they're not entitled to the boosting payments.
No.
Okay. Because they simply don't pay wages.
Yeah.
Any entity that pays wages is entitled to the boosting payment.
If their income has dropped substantially, what help is there for them?
Yeah, so they would be able to claim, well, if it's dropped 30% from March and April, either month, they would be entitled to the JobKeeper payment. And
is that
they would
$1,500 a fortnight, is it?
Yeah, $1,500 a fortnight, and they would apply as a business participant.
Okay.
Simple as that. Yep.
All right.
And they do that on the ATO, or they do that on the MyGov.
So they're
ID.
treated almost like an employee that's been stood down type thing.
Yeah. So because their income's turned down, they're entitled to it.
Oh, that's good. Well, from all of us here at Switch Finance, thanks for... Oh, hang on, we can't shake hands, you're on elbow. Mate, I really appreciate you coming in and doing this. It's very complex, all these different grants and whatnot available from the government. If you need help with it, we will put a link to contact Rowan if you need to ask any questions or need some help with your tax. I certainly did, and thanks very much for your help in that area. So, yep, thanks again, mate. Obviously, disclaimer, this is not personal financial advice, just general in nature. If you want anything detailed, feel free to contact our office and we can give you a personalised assessment.